Hi everyone, today we are going to cover also one of the more basic strategies for trading Forex. It's called a breakout strategy, and it's one of the more basic strategies since it's easy to identify and it's very also easy to set your take profit and especially stop loss, so which means that it's very good from the point of risk management. So we have identified 5 steps that you need to follow and undertake in order to activate this strategy. So first step will be to identify a trend line, and of course trend line is a diagonal line that connects at least two swing lows or swing highs. In this case it's high since it's downtrend, so this line is acting as resistance. So here we have first touch, second touch. Here we have a number of touches. We're going to count it as one touch since it's one after another. They're like repeated waves, and then here we come close for even a fourth touch. But what's important for this strategy is we didn't see any penetration through this trend line, hence we are looking to have one in the near future, since we had 4 touches more or less that were rejected, and after each and every touch you can see that the price rebounded lower, and then after the 4th touch and inability to move above the trend line, then we saw a push lower, a big push lower, which means that price consolidated for some time and then continued to have another push at the trend line. Usually when you have a consolidation down below and then another sharp leg higher is going to take place, like we have it here for the example, and then we have a here 5th touch of the trend line. So the first step will be to identify the trend line. The second step will be we are looking for the penetration of the trend line, which actually happens here, and close comfortably above the trend line. What you don't want to see is you don't want to go really and study the price under microscope and see whether we closed it above the trend line for a pip or 2 above it. What you want is a close like we have here. It is 15 pips above the trend line close, and this will be the second step for this strategy. The third step is that we wait for the retest. Why are we doing this? Because you don't want to enter the trade as soon as the price closes and the candle is formatted on a 1-hour chart, because here we have a close that is, as we said, 15 pips above the trend line. But the question is, what happens if the price pushes 50 pips above the trend line in 1 hour and closes here almost near the top? You don't want to enter the trade there, since you may then enter into the trade and then price rebounds lower, and then you are suddenly in a trade, what is this, 60-70 pips lower, so you're already in red, and this is actually the point where you need to enter into the trade from the risk management point of view. So here let me zoom in. So here you're entering the trade, as you can see, push above and then retest here, and then you enter the trade. So in this particular case it's 117.87, and then that will be the 4th step, I'm sorry, to enter into the trade, and the final step will be to identify stop loss and take profit. Stop loss is easy to identify because what are you trading here? You're trading a breakout, which means here we are buying the price because we expect continuation higher, because we broke the trend line that kept the price below it for weeks. So here what we don't want to see, we don't want to see push back below it and then a close below it. That's why I'm advising that you put your stop loss at least 15 or 20 pips below the trend line, so you guard against these pushes below 5-6 pips pushes below. That is more like a choppy price and choppy trading that has a goal of stopping out a lot of investors out of the game. So here you want to put your stop loss. I put it here, as you can see, it's around 20 pips. in order to guard myself, as I said, against this small penetration. Take profit, it's a bit more tricky to identify, but more or less, since this is a very basic strategy, you simply have to look at the bigger picture and find a horizontal resistance. What are the traders who are entering long and who are long from here? Some of them are long from here or from the breakout here. Where are they looking to exit their trades? You always have to put yourself in their minds. So if you analyze it, then you're gonna have the first level. This is a big horizontal resistance that comes at 1855. Is it either that level or even higher at 1880? Here in this particular case, we went sharply higher and touched this first resistance to the pip. You can see here this touch and this touch here to the pip. If you also, of course, want to be more conservative, you can also trade against this resistance point, but then we're talking about 20 pips take profit. What I advise is that you always look at least 1.5 to 1 risk reward ratio, which means that if in this case you risk 20 pips, you're looking to gain at least let's say 30, 40 or 50 pips. So it is very important here that you respect both levels. So if you set your stop loss, that you move your stop loss lower, because if the price closes here immediately after we penetrated, then we're gonna see another move lower. Why? Because the price couldn't sustain above the trend line. What we saw here is a classic breakout. So we went above it, we came back to retest, and then sharp move higher, in this case 70 pips higher. Let me also use another chart to show you this more or less very similar picture. So again, we have a trend line. Here we have some touches, but then this touch is very important, since you can see now that we formed a very nice resistance trend line. And as soon as the trend line is formed, you can see that investors are going to try to penetrate above the trend line. Why? Because the more the trend line, the longer the trend line is, you have, in this case, you have more sellers. So you have people who are selling the price here because they think, oh, the price is going to rebound from here and go back below, and those people are putting their stops here. This is why it's important to always be in the trade in the right time and not wait enough, because usually breakouts happen very quickly. So here what we have is we have a couple of pushes below, but actually only here, this candle where we close comfortably, we close 10 pips above the trend line, or even more, 12 pips above the trend line. Only here you can actually then say, okay, we broke above the trend line, and then you wait for the retest, which happens here. You see that this candle touched first the trend line to the pip. Here you enter your long trade, and then you, as advised, you put your stop losses around 20 pips below to protect yourself against these moves, 5, 6, 7, 8 pips moves through the trend line, and then you're looking for a take profit, which again, I repeat, for some people it's enough to get 20-30 pips. But if you're looking to risk 20 pips or 25 pips, depending on your risk management strategy, then we advise that you in that case that you target at least 40 or 50 pips. And what you in the same model like with the euro dollar, if you here, it's very easy to identify take profit. You have this big horizontal resistance level. You see many touches here at 129.10, and you can see that as soon as the price breaks this trend line, it goes immediately higher and tests 129.10. So we are talking here, in this case, it's one of the best examples that we could find. We are talking about 100 pips take profit against 20 pips stop loss, which is a risk reward ratio to 5 to 1. Of course, and at this point we did not know that we're gonna go all the way up to here, but as I said, for those who are patient and who believe in big levels, this is for sure a big level, then this is what happened in the end. So just a recap, 5 steps to follow In order to implement the breakout strategy, the first one will be to identify the trend line. The second one will be that you have a close above or below the trend line, depending if it's a bullish or bearish trend line. Wait for the retest, extremely important for the risk management context. Then enter the trade, and of course set your stop loss and take profit in order to reflect risk reward, which is at least a 1.1 to 1, or even better 2 to 1.